Ever looked at a swanky hotel or, a modern apartment building and thought, man, I'd love a piece of that, but figured it was just reserved for the big players?
Yeah, totally out of reach for most people.
Exactly. What if I told you for literally the price of maybe a couple of coffees, you could actually get started?
That definitely grabs your attention.
Hi, welcome to another Finflow podcast. Today, our topic is real estate crowdfunding.
It really is a fascinating evolution, isn't it? For so long, the world of property investment felt like this uh, walled garden.
Hmm.
Real estate crowdfunding is basically building bridges over those walls. It's making it accessible, to a whole new group of people.
Exactly. So imagine something like Kickstarter, but instead of funding the next cool gadget, you're pooling your money online with others.
Regular folks.
Yeah, everyday folks like you listening, to invest in actual tangible properties. We're talking apartment complexes, maybe office towers, even those like dreamy vacation rentals you see.
And the real beauty, I think, lies in the potential to earn. You're not just donating or anything.
Right.
You're becoming a stakeholder.
Yeah.
You're earning a portion of the income these properties generate. So think rental income coming in, or maybe the property appreciating over time,
Potentially leading to profits down the line, yeah.
or both, ideally.
Right, and here's where it gets really interesting for a lot of people. Forget needing like as a six-figure down payment.
That's the big hurdle usually.
Totally. We're talking about potentially starting your real estate investment journey with surprisingly small amounts. Maybe $10, maybe 100, maybe 1,000.
And still getting a slice of the pie, as you said.
Yeah.
Which naturally leads to the question, okay, why is this suddenly so popular? Why now?
Good question.
And it really seems to come down to addressing some of those fundamental hurdles that kept people out traditionally.
Absolutely. The most obvious one has got to be that incredibly low barrier to entry.
That's number one, yeah.
Yeah. You genuinely don't need to be wealthy to get your foot in the door. It's like democratizing real estate investment in a way we just haven't really seen before.
And that accessibility, well, it fuels diversification too.
How so?
Well, if you don't have the capital to buy multiple properties outright, which most people don't, crowdfunding lets you spread smaller investments across different types of properties.
Okay.
Maybe a bit in residential, some in commercial, and even across different places, different geographical areas,
Ah, right.
which can be a really powerful way to manage risk. Not putting all your eggs in one basket.
Exactly. Instead of being tied to one house in one town, you could have like little bits spread out.
Many different real estate baskets.
Yeah. Plus, another major draw, I think, is the whole passive income thing.
That's a big one. For many, the idea of getting rental income without, the hands-on landlord stuff.
Oh, yeah, the midnight calls about leaky faucets.
Dealing with tenant issues, maintenance.
Yeah.
Oh, yeah.
Yeah.
It's appealing. You're essentially outsourcing all those headaches.
Definitely. And it's not just about like small rental homes either, is it? This model also opens doors to bigger stuff.
Right. Opportunities that were historically just for large institutions or, people with insider connections.
So you could potentially be part of like a significant commercial development.
Precisely. These online platforms, they're using technology to connect lots of individual investors with developers working on, well, substantial projects.
Yeah.
It's really shaking up real estate finance.
Okay, so for someone listening who's like intrigued now and wondering, all right, how do I actually do this? How does it work in practice?
Well, the process is generally pretty user-friendly, actually.
Hmm.
It usually starts with picking an online platform that facilitates these investments.
Okay.
And you'll find quite a few reputable ones out there. We're talking names like Fundrise, Realty Mogul, CrowdStreet, Ground Floor.
Heard of some of those?
Yeah, and each often has its own niche, maybe specializing in certain property types or investment structures.
Right, so you find a platform you like, then what?
So once you've picked one that kind of aligns with what you're looking for, you'll typically create an account, usually a pretty simple online process.
Mm-hmm.
Then you just browse the available investments listed on their site. They'll usually give you lots of details. The property, location, the expected returns, timelines, all that stuff.
And then you just put money in.
Pretty much. You decide how much you want to invest, and funding is usually straightforward.
Yeah.
Debit card, bank transfer, that sort of thing.
Okay.
And then, as the property earns income from rent, or if it eventually gets sold for a profit, you get your share. Your proportionate piece of those returns based on your investment.
Now, let's be clear on this, though. You're not suddenly holding the actual deed to, like, apartment 3B, are you?
Huh. No, not usually. That's
Okay.
a really important distinction. Instead of owning the physical bricks and mortar directly,
Right.
investors typically own a share in a legal entity. Often it's an LLC, a limited liability company, or sometimes a REIT, a real estate investment trust. That entity owns the actual property.
Okay, so your investment is in the vehicle that owns the asset.
Exactly. Think of it like owning shares in a company, and that company happens to own real estate.
Gotcha. That makes sense. Now, you mentioned REITs. Can we dig a bit deeper into the different flavors or types of real estate crowdfunding?
Sure. One main type is called equity crowdfunding. That's kind of what we've mostly been talking about.
Okay.
You own a portion of the property itself, effectively. So you're eligible for a share of the rental income and any potential capital gains if it's sold at a profit. It's a direct stake in how that asset performs.
So you're kind of a co-owner in a way. What's another type?
Another significant one is debt crowdfunding.
Debt.
Yeah, here you're acting more like a lender. You provide capital to a real estate project, and you earn interest on that loan amount.
Ah, okay.
It's a bit like peer-to-peer lending, but just focused on real estate deals, often for shorter time frames, too.
Interesting. And then there were those REIT-based platforms you mentioned.
Right. Some platforms pool everyone's money into these private REITs.
Mm-hmm.
These REITs then go and invest in a whole portfolio of different properties. So as an investor, you earn returns through the dividends the REIT pays out. It's a way to get diversification within just one investment. Kind of like a mutual fund, but for real estate.
Okay, so equity, debt, REITs. Different ways to approach it, different risk levels, I imagine.
Definitely. Each has its pros and cons.
Right. Let's get into that. The real nitty-gritty. What are the actual advantages and the disadvantages of jumping into this?
Yeah, it's super important to see both sides. On a plus side, like we've hammered home, those low investment minimums are huge. A game changer.
For sure.
You also dodge the day-to-day landlord hassles.
Yeah.
The platform and the property managers deal with that stuff.
The hands-off appeal.
Exactly. It's designed to be pretty passive income, potentially. Plus, you get access to a wider range of deals than you'd likely find on your own.
Yeah.
And the platforms usually give you these pretty transparent dashboards so you can track how your investments are doing.
Those are some strong points. But, okay, what about the potential downsides? What do people need to watch out for?
Well, one of the biggest ones is illiquidity.
Meaning your money's stuck.
Pretty much. Unlike, say, stocks you can sell quickly, your cash in crowdfunding is typically tied up for the whole project duration. That could be years.
Okay, that's important.
Definitely. Also, and this is crucial, returns are not guaranteed.
Right. No free lunch.
Exactly. Real estate values go up and down.
Yeah.
Projects can hit unexpected problems. Things can go wrong.
So it's not a guaranteed home run. Far from it.
Not at all.
Yeah.
Also, some platforms might have rules about who can invest, maybe only accredited investors for certain deals, or restrictions based on location, like U.S. only.
Okay.
There's also just the basic risk that the project itself doesn't perform well or even fails. That would obviously impact your money.
Right.
And finally, fees. You've got to look at the fees the platform charges, management fees, service fees.
Yeah.
They can add up and eat into your profits.
Always read the fine print then.
Always. So yeah, doing your homework, picking the right platform for you. It's absolutely critical.
Speaking of platforms, you mentioned a few earlier. Any that might be good starting points for beginners.
Yeah, for folks just dipping their toes in, Fundrise is often mentioned.
Right.
They do that REIT-style portfolio thing, and their minimum is super low, like $10 last I checked. Makes
Yeah.
it very accessible.
Wow, okay.
Then you have CrowdStreet. Their minimums are usually higher, but they offer access to these bigger, sometimes institutional quality commercial deals.
More serious money, maybe.
Potentially, yeah. Realty Mogul's interesting because they offer both debt and equity options, so good variety there.
Okay.
Ground Floor focuses on short-term real estate loans, again, low minimums, and the potential for maybe quicker returns since the loans are shorter term.
Right.
And another one is Arrived Homes. They let you buy shares in individual rental homes, again, starting pretty low.
That's a helpful overview. So if someone's looking at these, what should they be comparing? What are the key things to check?
You really want to look closely at the fee structure for each one. What are they charging?
Mm-hmm.
Check the minimum investment required. Does it fit your budget? Look at the types of projects they typically offer. Residential, commercial, debt, equity. What matches your interest?
And their track record.
Absolutely. Look at their historical performance data, if available. But remember, past performance isn't future guarantee. The best platform, well, it really depends on your own goals, your risk tolerance, and how much you're looking to invest.
Okay, makes sense. So say you found a platform or two that look promising. Before actually clicking invest, any final, like, essential tips for a first timer?
Yeah, definitely. Top ones would be start small. Seriously
So
small.
dip your toe in.
Exactly. Test the waters with a minimal amount you're comfortable possibly losing just to learn the ropes. Second, try to diversify, even within crowdfunding.
Don't put everything into one project.
Right. Spread it across different properties, maybe even different platforms eventually. Third, and this is crucial,
Mm.
read the offering documents, all of them.
The fine print again.
Understand the risks, the projected timeline, how you might eventually get your money back, the exit strategy. Fourth, be wary of hype. If it sounds too good to be true,
It probably is.
usually is.
Yeah.
Don't get swayed by crazy high return projections without understanding the risks. And finally, think long-term. Most real estate plays, especially equity ones, need patience. It's not usually quick flips.
That's all really solid advice.
Yep.
So just to kind of wrap our heads around it, who is this real estate crowdfunding really best for? Who's the ideal person?
Well, I'd say it's really well suited for maybe new investors or people with limited capital who still want exposure to real estate.
Yep.
Also great for people seeking passive income streams who don't want the landlord duties.
Busy professionals, maybe.
Exactly. Busy folks who prefer a hands-off approach.
Yeah.
And also anyone looking to diversify their overall investment portfolio beyond just stocks and bonds. It adds another asset class.
And who might want to steer clear, or at least think twice?
Well, if you need quick access to your money, if liquidity is really important, this probably isn't the best fit because of that lockup period we talked about.
Right, the illiquidity.
Yeah. Also, if you really want direct control over the property itself, like choosing tenants or managing renovations,
Yeah.
this isn't it. You're passive.
Makes sense.
And, of course, if you have a very low tolerance for risk or you just can't commit your capital for potentially several years, you might want to look at other options.
Okay, so bringing it all together then, it really seems like real estate crowdfunding has genuinely opened up new pathways for everyday investors, hasn't it? Getting into a market that felt pretty exclusive before.
Absolutely. It's democratized it, like you said.
Yeah.
But, it's vital to have realistic expectations. It's not some get-rich-quick scheme.
Definitely not.
But it does present a legitimate and potentially rewarding way to build wealth passively over the longer term.
So if the whole world of real estate investing seemed like this distant mountain before, well, now there's a much more accessible trail heading up, something for you to potentially explore.
Well put.
Hey, let me know in the comments if you're considering giving real estate crowdfunding a try, or if you already have, we'd love to hear about it. And if you found this deep dive helpful, please do like this recording, subscribe to Finflow for more chats like this, and maybe share it with someone you know who's looking to make their money work smarter.
Yeah, definitely subscribe.
We've got more explorations coming up on investing, financial freedom, building that future wealth, so turn on those notifications so you don't miss out. Until our next discussion, everyone, invest wisely and stay curious.